In this video, I'm going to do a post-analysis of my trade in HUBB, which I just closed for a loss of 1 hour. So as usual, I'm going to go through 5 criteria in this post-analysis: situational awareness, stock selection, entry, exit, and position size, and grade my trade on each of these 5. So let's start with the situational awareness. Market has been going sideways for several months now, and so has my portfolio's equity. I haven't gotten much traction from trades yet, and I haven't been able to size up. And so I've just been trading pilot size positions, risking 0.12% of my total equity on each position and taking them as swing trades. So essentially just selling them into strength and taking quick profits. So that was the plan with HUBBs as well. In this case, we can see that the industry that HUBBs belongs to is not a very strong industry. In fact, it's underperforming the general market, but HUBBs itself has some relative strength over the SPY. And that was probably because of the earnings beat that it just gave out on this day. It went up quite significantly on huge volume. It beat on both the top and the bottom line and made a new all-time high, which is quite remarkable in a bear market. So those were the reasons why I selected this stock and put it on my list of earnings winners, which I think is fine. That is my standard criteria. I really like the fact that the stock had follow through as well. Immediately after the earnings, it continues to go up rather than sideways or pulling back, which is a very strong sign of strength, making new all-time highs every single day. And even though it pulled back these 2 days, it had a very long lower wick on this day, which signals bullishness. And it also could serve as a shakeout. Also, it didn't even tag the 10-day, immediately bounced back, and barely gave up any of the gains that it had made in the past 5 or 6 days. So this pullback was actually very constructive and normal. And after that, the stock just went sideways for a few days. This was also very constructive and normal. And this day, when the stock broke out from this range, is when I took the entry. Now, I do post all my entries and exits on Twitter, so I do want to go back and check what the situation was at the time when I took HUBBs. So I did have it on my watch list, which is good. I like to take trades that I've planned in advance. I noted it was an earnings winner at all-time highs. Risk was pilot buy. The R wall here was very low at the time when I bought it. So that was definitely problematic and not an A+ setup. And in this kind of environment, I really should not have taken something like this. This is very, very out of the ordinary for me. And consequently, I think knowing that, I messed up my stop loss too. So I say that I put the stop loss at the low of yesterday, since our wall confirmation is not then spread is as much as the 5-minute opening range. Okay, let's go and check where I actually put my stop loss. So that, since I bought it on this day, the stop loss was the low of this day. Now, this is not a very logical stop loss, because neither is it the low of the breakout day and neither is it the swing low. The swing low would have been this level, which would have been a much more logical stop loss. Taking a stop loss randomly as the previous day, and especially on a day that had such low volume, was pretty meaningless and desperate in my opinion. So I would definitely say the entry on this stock was terrible. Neither did it have volume confirmation and neither was my stop loss logical in any way. And it just continued. What I did was I did take it on the 5-minute opening range, and you can see this on the 5-minute chart when I was entering as well. There was really no volume. It was a desperate entry. I just got in, and right from the start, the stock didn't put me in profit. It's just been going sideways. Today it gapped down. It hit my stop loss and I got taken out. So in terms of the exit, was there anything that I could have done better? I think I could have exited it the same day itself, which is in line with my rules. One of my exit rules is if the stock has no cushion, then I do sell it the same day itself and do not carry it into the second day. And on this day, it had quite a weak close and had come back into the range, had not made any progress, and holding this into the next day was just wishful thinking. In my opinion, this is one of my weaknesses. I do not cut my losses quickly enough. Even when I know that the trade has soured and the odds are really not in my favor and my original thesis is not playing out, I still tend to hold on to hope and keep waiting for the full stop loss to be hit. And this is what really pulls my account down a lot. I do want to be able to cut my losers even faster, preferably at half hour or even a third of the hour as soon as the trade is not going as per my expectation or the train is not arriving on schedule, so to speak. So in this case, I think this was a very poor exit. Okay, so let's review the 5 criteria again and see how I did on this trade. So I would say in terms of situational awareness, I would give myself half a point here because while I did follow the rules of taking a small position size and treating it as a swing trade, I was very aggressive in my entry. And I should not have taken this trade in retrospect, given that the environment was so poor. Stock selection was fine. It was an earnings winner at all-time high. Entry was poor. There was no relative volume. And the stop loss was completely illogical. The exit was very poor. I should have exited the same day. And the position size, which was just the pilot size, was fine. So overall, I would give this trade 2.5 stars on 5. If there's anything else that I missed or something I could have done better in this trade, do let me know. I'm always looking to learn. But I hope that you were able to learn from my mistakes too in this trade and that this was helpful. Thank you.